Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. Today is September 4th, 2024. In today's video, I'm basically going to be giving you a window to my thought process and how I do a technical analysis breakdown on Bitcoin and see if we can figure out what's going to be happening over the next couple weeks to months. First things first, before I begin, this is not financial advice. This is for educational purposes only. I have been doing technical analysis for 17 years now. I was taught this process by my father, who was an options trader for almost 30 years, and been invested in crypto for almost 10 years. So I've experienced multiple halvenings and cycles. And once again, I'm trying to regurgitate all of this information into a quick 10-20 minute video so that you yourself could justify price action based off of what is happening in the chart and not what's happening in the news. So join the Discord. Links in the description. I posted this the other day and yesterday that this is my clear trend and trend lines. I do think this trend does have a higher probability of breaking to the upside. The most important thing is, do we break this high here of 73,998? If we don't, then this next macro move that happens is unfortunately a lower high. Now, why did I come up with that quick market analysis? Because long-term trends will predict what shorter time frames do. When I take a step back and I look at this picture right here, not necessarily great because we are having volume coming down. We do, like we have the potential death cross on a monthly time frame. Nothing positive usually happens from that, but I do think we potentially could have one more move to the upside, leading to hidden bearish divergence to the downside on the indicators. So once again, I think this potentially plays out. Well, we don't death cross, but the RSI did go down, breaking the moving average. You can see right here. I do think we could bottom and come back up, use the 90 as resistance, sorry, the 70, and then use the moving average as resistance, showing us that this move could break to the upside. We could go to 77 or 80,000 or 85,000. Everyone thinks that we're going to 100 to 150, the same way everyone thought it here, but unfortunately the indicators are telling you something else. That's the whole point of this channel, is to teach you to bet with trends and indicators and not people, right? Because trends and indicators don't lie. Like, if this happens, and then if this happens, this happens. It's clear as day. And then you set an alert or two, and then you could sit back and let it play out. What do I mean by that? To give you an example, right? Nothing changes until we break 64.8 and break out of this most recent high. And nothing changes until we break this 54,616 level, which is technically the most recent low, right? Until we break that, we're in this downward channel, making lower highs, lower lows every time. So we're trying to figure out, are we going to have one more low right here, and then we break to the upside? Are we going to make a lower low and continue in this trend? So let's start talking some facts and numbers here, Cuzzy, okay? When I do take a step back, we are still in section A, and we are still in section A, meaning the RSI still is above the 50 and the 70. So it's bad, but it's not that bad. So we still can have some green on the horizon, and I do think alt season happens, the next pump up, right? So now we zoom into the weekly. I've been saying for, once again, weeks now, the most important thing is the weekly RSI staying in section A. Staying here, this bottoms, and we do have that run back up in section A. We have a continuation pattern in section A. We go up in section A. We go down and have continuation to the downside. Look down here in section B. Okay, in section B, that's when we have blood, cuzzy. Okay, this is 10,000 to 3,000. This is 6,200 to 3,000. Okay, this is 46,000 to 15,000. So, with that being said, remember, I'm betting with the long-term trend. If the weekly stays in section A and we start seeing that we're making higher lows and we break above the moving average, I'm instantly, not financial advice, thinking bullish and opening up longs. It's just that simple. I could look left and just simply look at this time frame and see every time we've come down and consolidated but stayed above the 50, bull market. Every time we had bounces but stayed below the 50 line, bear market. Just that simple. So the most important thing, once again, is the next couple of weeks, the next week or two, right? I want to see if we are making, lower highs. Once again, you don't want to be on the bottom side of the moving average, right? You want to use the moving average as support, like you could see here. So most important line is this right here, this 45.85. Now it's a range, right, to 50. Yes, we're a little bit below it right now, but you could see here we're forming this bottom. As I zoom in to a 5-day, I start seeing something. The most important thing, if you could figure this out, will help you tremendously. It's hidden bullish or hidden bearish, meaning the price is doing one thing and the indicators are doing another. Like I just showed you on the monthly and the longer time frame, right? We don't want to be trapped in the hidden bearish divergence on the macro time frames. Well, now if we zoom into the shorter time frames where these plays last a couple of weeks, right? We're getting hidden bullish, the start of it. What do I mean by that? These swings here, this one here, this low here. Well, look at the RSI. The RSI made a double bottom and is technically making a higher low, showing me that we potentially could have an inverse head and shoulders here playing out. Okay, inverse head and shoulders is when you have one swing low here. Okay, your next swing low is lower, and then the next swing brings us to about the same high or higher than the most previous low, right? So it's lining up exactly with this one here. If this lines up, then we have the potential that this is the bottom at that 55 to 57,000. We go up, we have potential to not only go back to 60,973, but potentially break and fill this side of the leg back to about here. That's my technical analysis. 68.5 to technically 70,001. Everyone's going to be saying that we're breaking out of resistance, and we would be. They would be correct. Meaning resistance is this yellow line here, resistance is this yellow line here. Yes, we would be breaking out. Most important thing is, are we breaking out and making a lower high? Because I'm going to say something now that I've been wanting to say for the past 2 videos, but I forget, unfortunately. So everyone is comparing this part of the market cycle to this part of the market cycle, meaning, well, yeah, we came down, we went a little bit below the 50 line, but look, we're going to go back to the 70, and we went from, forget it, man, 25,000 all the way to 75. And, if you just take this type of move like this, and you just do it again here, I mean, you're looking at like 122,000. Not correct. You need to look at the longer time frame and see where on the monthly time frame was the MACD looking here, and what was the MACD monthly time frame looking here. If you have a golden cross and the monthly MACD is forming here and you have room to grow to the upside here, totally different than this being the top of the MACD, and it looks like we're having a death cross here. You understand? I'll explain to you. Let's zoom out. Okay, we have our circles. Look at the MACD and look at the RSI. We broke into section A. The RSI was bottoming. We used it as support here. Your MACD went bearish from October 2021 and officially golden crossed here, June 2023. This was the best time to buy, cuzzy. We buy on golden crosses and room to grow, not on death crosses and room to bleed, right? Death crosses and room to bleed lead to 60,000 to 15. This part of the market cycle, even though it looks the same on a 5-day, a weekly, a 4-day, and a 3-day, is not the same time in the market as it is now. Okay, we broke the RSI. Volume's coming down. Volume was going up. You are not comparing apples to apples, unfortunately. So you should not expect the same outcome. You understand? This is why you cannot just look at one time frame. You need to look at multiple time frames and analyze every single one that you see on my screen. Not the 1, 2, 3, 4, 5 minute, but start with a monthly, do a 3-week, then a 2-week, then a weekly, then a 5-day, then a 4-day, then a 3, then a 2, then a 1. Another reason why I highly advise that is you will see trend lines easier on longer time frames because there's less candles to work with. You might also have different trend lines depending on different time frames you're looking at. Always use the ones on the longer time frames that have reversals on them, etc., etc. Let me explain. This doesn't line up, cuzzy. This doesn't look like it was the bottom here, but like, all right, it went below there. You had a wick here. You had this doesn't line up, right? Most people would do something like this. And let me zoom out. Let me show you, right? Daily. Okay. All right. You can see here reversals, right? This is what I mean by reversal candles, okay? Just a green and then a red, or a red then a green. Let's see if I go to a 2-day. Okay, still doesn't line up though, but you could see this called officially the bottom of the swing, the top of the swing, the bottom of the swing, right? You want your trend lines to line up with the tops and the bottoms of the swings. As soon as I click on the 3-day, it was like ding, ding, ding. There it is. You have your one level, then your over greed level. Then you have your one level and your over greed level. Another thing I want to tell you. Trend lines go with trend indicator. The trend indicator is the MACD. You should be lining up your trend lines with longer time frames, not shorter time frames. So what I mean by that is you could see we had a death cross, okay? If the MACD is coming down and they had a death cross, that means your trend line should be pointing down. If you have a golden cross and your MACD is pointing up, your trend lines are now pointing up. You understand? Like this. Okay? Once you have a death cross, the trend is over and you now have new trend lines that you need to draw. Okay? See this falling wedge? Falling wedge broke out when you had a golden cross on a longer time frame showing you the swings. Trend lines now need to go up again. Okay? Trend lines go up until when? We had a death cross. You have a death cross, trend lines now go down. Okay? Trend lines going down. Trend line going down. Did not golden cross. Trend line going down. So trend lines need to go down. You understand? If we're looking at the monthly time frame and we're seeing the trend is now going down or potentially has the opportunity to have a death cross in maybe a month or two, trend lines don't go up anymore. Okay? Most people are going to be like, yep, we have 1, 2. Here it is, cuzzy. Okay? Your trend started here. You have one bounce. You're having your second bounce. Unfortunately, this trend can no longer go up if your MACD trend line is going down. It's that simple. I don't care what the ticker is. Trend lines go with the trend indicator. And unfortunately, the trend indicator looks like poop. So we're curious to see if we do this, and then do this. And then it's a wrap. Let's zoom into the daily time frame. I'll give you a quick technical analysis here, what I'm seeing. So once again, on a 2-day chart, I'm looking at MACD, RSI. Are we forming hidden bullish, hidden bearish? Are we pointing up, pointing down? Are we in section A, section B? Unfortunately, we are death crossing and coming down. Unfortunately, you can see here we are in section B and have room to bleed back to the 34. So I have an alert. I think it went off. I'm going to lower it to 56.9. I'm curious to see if this is a head and shoulders pattern that will potentially fill this leg, leading us back down to this level here. And then we want to see, I'll end the video with this, is we want to see buying pressure at this level right here again, this 53 to 55,000. And while we form the same lows, and the 4-day and the 5-day are forming higher lows on the RSI, once again, that'll fuel the positive breakout to the upside, right? Now, once again, a lot needs to happen. As of right now, we need to stay here. You can see here there's buying pressure. We need to stay above this 57,000. Worst case, 55,897, right? Not financial advice, but if you're looking for a play to the upside, right now, if it goes back to this high, you're looking at 11.57, you're looking at 13%, 14%, greed levels to 20%. That's the video. Love you guys.